Hello everybody. Through my experience with 212 Trading Company, in this tutorial we're going to learn how we can start trading at Forex. Thus, after we have opened a real account at 212 Trading Company, this company will be considered as our brokerage firm, in which we have to make a deposit. For example, let's assume that we're going to make a deposit of £100, then we will be able to get £100 more as a bonus from our brokerage firm. We can get this feature due to the high liquidity of the Forex market. For example, the trading volume of this market is 5 trillion a day. So let us start trading. But for teaching purposes, I'm going to show you how to start trading through using the practice account, which is the virtual account instead of the real one. To start trading at Forex, you have to keep in mind that we have two main buttons, which are the buying button and the selling button. For example, we have to press on this window, which show us the details of our transaction. When investor expects that the price of gold will go up, then the best thing is to buy gold instead of selling gold. While if the investor expects that the price of gold will go down, then the best thing is to sell gold, even though if he doesn't has gold in his portfolio. This transaction known as short sell, through which investor will be able to sell gold though he doesn't has gold in his portfolio. Let's try this. Here I'm going to buy 12 ounces of gold, then confirm the buying transaction. Here we can see the details of our position. As we can see, the result is minus $5.76, and the margin here 68.52, and here we can place an order of stop loss or take profit. Here is the current price. Here is the price at which the transaction was executed, and here is the quantity, which is 12 ounces, and here is the direction, which is buying order. When investor buy gold, in this case we can say that the investor entered or took a long position, while when the investor sell gold instead of buying gold, then we can say that the investor took a short position or entered a short position. And here we have to watch our result. When we start generating profit, we can close our position. For teaching purposes, let's assume that we have generated some profit. To close this position, we can do that easily through clicking on this box, then OK, and here we can see our position or order was executed. Let's assume that we have expected the price of gold will go down instead of climbing up. Here we can sell gold instead of buying gold. Here we can see our result is too high. For example, our loss is 2,170. Here we have to watch, and here is the margin that will be deducted from our portfolio. This margin cannot be used, it's frozen right now. And here under this order we can stop our loss or take profit. Here we can see the current price, and here the price at which our order was executed, and here is the direction, which is short position, and here is the quantity, which is 4,000 ounces, and the instrument is gold. Here we can see the details of our instrument. Here is the selling price, and here we can see the buying price. Here the change, the percentage of change. Through watching this line, we can conclude that the buyers are controlling the market. When buyers controlling the market, the price will go up, while at this point the resistance action will be started by buyers, or in other words by sellers. When the resistance action started by sellers, they will try to push the price down. And here let's assume that the price of gold will go up. When the price of gold goes up, our losses will be expanded since it's a selling order. While if the price of gold go down, our profits will go up. Here we can see we have generated some profit, and here we can close our position. Here we can see order executed, and we can see our profit as well. Open positions, we don't have any open position. Here we can see, though we have started our trading with 50,000, the result right now is 5202. That is due to the profit we have generated through our selling order. So as we can see, it's very easy to buy or sell any instrument, while the difficult thing is to evaluate the instrument that you are going to deal with, or to try to anticipate the direction of price. For example, whether the price will go up or go down. So to do that, you have to check the instrument details to see who are controlling the market. As I have said, when the buyers dominating the market, the sellers will start to push or to try to push the price down, which in other words means that the price will be expected to go down. So the best thing in this case is to enter or to take a short position instead of entering a long position. And the other thing that you can do is to check the Forex calendar, which is a daily Forex calendar. Here, for example, if you're going to buy or sell currencies such as the Great British Pound, then you have to check any news related to the UK, for example, or to the USA if you are thinking to place your orders or to trade with the US dollar. Thank you for watching, and in the coming tutorial I will explain how we can trade at Forex in details. Thank you.